After a Sell America day yesterday with the stocks moving lower, yields moving higher, we're seeing a little bit of a reprieve in the U.S. Stock market, and the U.S. bond market is mixed with the shorter end higher, the longer end lower. As far as the dollar fell sharply yesterday and is a little bit mixed in trading this morning, at least against the three major currency pairs. I'll go through those three major currency pairs from a technical perspective in this video. So let's get started. Looking at the daily chart of the euro versus US dollar and trading yesterday, the market moved above this swing area here where we had swing lows right here. They broke through that level and then used that level as resistance right here. That moved to the upside, took the price above the 1.1482 level up to 1.15158 level, and on its way to potentially a move toward this swing area up here near the 1.1663 to 1.16916 level. It's hard to see, but that's where we would potentially be going. But as you can see, the market has rotated back to the downside. We're currently trading at 1.1494 after trading as low as 1.14812, which was right near the low of this swing area, just below, as a matter of fact. So we're trying to hold support against this low level at 1.1482 on the move back to the downside. If the market can hold that level, that would be the best case scenario from a tactical perspective for the euro versus US dollar. Let's look at it more closely. Here the 81 level is up through here. Also in play, I guess I should say, is this 72 level. So in addition to the 81, 82 level, let's put the support down to 72. So 72 to 82 is going to be our key support for the euro versus US dollar trade here today. As long as the price can remain above that level, then the buyers are in firm control. Okay, the sellers aren't winning anything. If the sellers want to win something, they need to get below that 82 level off the daily chart, and then they need to get below the 72 level, which was the high price from not last week but the Friday before. And getting below that level would give the sellers a victory. Okay, and there would still be work to do. The work to do would be to get below the 100-hour moving average. In last week's trading, we did break below it a number of different times through this day right through here. I guess that was Thursday's trade, but could not sustain any momentum to the downside, and then based against it on Friday's trade before moving to the upside. It was yesterday. It was a big move to the upside on this currency pair. So we need to get below both the 72 to 81 level. That gives a victory. More control comes with the break below the 100-hour moving average, and ultimately you got to get below the 200-hour moving average as well to increase the bearish bias. Let's take a look at the dollar versus yen next, and this currency pair on the daily chart has a couple levels in play. One is this swing area here between the 140.248 and 140.80 level. In between that is the 61.8% retracement of the move up from this low right here. This is the December, maybe January 2022, 2023 low up to the high price that we saw in 2024. The 140.48 level is in that area, and trading yesterday it came right down to that level, found support buyers. Trading here today, we're breaking below that level, or we saw a break below that level that has taken the price not only below the 61.8 but also below the low of this swing area. The next target would be this lone failed break to the downside right here, which was then quickly rebounded, and then we found support against the low price back here and pushed to the upside from there. So that level comes in at 139.57. The current price is trading at 140.20, so we are just below the low of this swing area right here, trying to keep the bears in play for the dollar versus yen. Let's take a look at the hourly chart. And the 24 level is right here. Here's that swing area right here between the 24 and the 80 level. That's off the daily chart. And as you see, the price did break back into that swing area right here, but we are now moving back down to the downside and moving below the 24 level as the New York session begins. So if we are able to stay below that level, keep the pressure on, get below the low price from earlier today, then it opens the door for that move down toward the 57 level. In the dollar versus yen. Conversely, if we are able to stay within this swing area, it gives the buyers a shot, but they need to get back above the 80 level, and then like the euro versus US dollar, there's work to do. The work to do would get back above the 100-hour moving average. In trading last week, the price in this case, moved above it just for one single bar here and quickly failed to the downside. So you can see the importance of getting above that level. If it is able to get above that level, then it opens the door for a potential move toward the 200-hour moving average as well. So this would be the progression for the upside. Get above this level, gives it victory. Then get above the 100-hour moving average is the work to do in the 200-hour moving average. Finally, let's take a look at the sterling versus US dollar. And if we take a look at the weekly chart here, you go back and you take a look at these highest price right here at 1.3433. The high price this week has reached a high of 1.3423, just about 10 pips short of that level. This level right back here goes in at 36. So we have 36. We have 33. We have this level, which came in at 22. So 22 up to 36 is the resistance. And in trading yesterday, we moved up to 23. So you can see the importance of that level on the top side. We need to get through all that cluster on the top side. You can see it off the 4-hour chart here. How the price came up toward that level, found willing sellers, and so pushed down a little bit. Now moving back to the upside, but I put it on the hourly chart. See where that pesky 100-hour moving average is, because all the pairs are saying the same thing. If we do continue the fall to the downside, and we have this support, which seems to come in around the 61 level, not once, not twice, but 3 different times right now. If we break below that level, then the next work to do would be to the 100-hour moving average. In trading last week, the price did not get anywhere near that 100-hour moving average through here and here at the lows. So getting below that 100-hour moving average would be needed to increase the bearish bias, give the sellers some hope, and then we're going to have this level and then the rising 200-hour moving average. So there's work to do in the sterling versus US dollar as well. So there you have it, a look at 3 of the major currency pairs to start your New York US trading session. My name is Greg Mikulski. Good fortune with your trading. Bye-bye now.